about the markets with respect to what's happening in the entire globe. Ritesh Jain, the global macro trader, is joining us right from Canada to talk to us about that. Ritesh, hi, thanks so much for making time and speaking with us. It's a pleasure getting you here on ET Now. First up, what's your take on all that is happening across the world? The Japanese central bank coming and assuring the markets as well. How do you see this entire thing unraveling at the moment?
So this bout has been won again by the market, not won by the market, again by the market. If you would have interviewed me an hour back, my answer was completely different than the answer which you are going to get it from me. An hour back, the answer was that for the first time, central bankers are not stepping into the market. They are allowing market to function. They're allowing leverage to go down. They are allowing that margins to, margin accounts to blow off, and it will settle down. Nothing will happen. It will settle down. But it seems in the last half an hour, they've actually exaggerated the problem. They've actually bowed down to the market. They've said, no, if the markets are volatile, we are not going to do anything. We are not going to raise the rates. So market will again test them. How? The yen carry trade will be back with a vengeance, which you can already see when US closed, dollar yen was 144.5 kind of thing. At current moment, it is 146.70, has spiked 2 yen. Basically, yen has depreciated by 2 yen, 1.5% after the remarks of deputy governor. So you can all put this thing in your rear view mirror and said what happened between Thursday, Friday, and Monday was a bad dream. If you got caught on the wrong side, sorry about that.
Yeah, no, point taken. Let's see whether that intervention helps or how it moves forward from here on. But how do you see the Indian markets panning in context of all of this? Do you think these will be the markets that will be insulated, or they will fall prey to what's happening across the globe? What's the view in India?
What we are getting our own 401k flows, which is equal to the pension fund flows. Everybody started comparing it. Those flows are not slowing down till the time the market continues to give positive return. Okay. The global backdrop, which was turning negative for us, how? When the volatility rises in global markets, which you can look at VIX, US VIX, or US move. US VIX is for equities, US move is for debt. Both US VIX and US move had spiked. When both these things spike, it tells you the volatility has gone up. When the volatility has gone up, that means the bid and offer spreads widen and people sell what they can, not what they have to. So when they sell what they can, and in that part, India also get hit because one, it is in positive. Secondly, they can. But there are a lot of assets which go illiquid, like over weekend, Bitcoin. Okay, on Saturday, Sunday, it trades on weekend, as you would be knowing. In a matter of 1 hour, $500 million was getting sold in the market, and there was a $3,000 move in Bitcoin on that particular day. Bitcoin had gone illiquid. So the reality is that if the yen carry trade, continues to get unwound even more, then it will bring illiquidity in the market through higher volatility, which in turn will affect Indian markets because you sell what you can. But if the yen carry trade is back, then what we are saying is for the time being, the volatility will come down. Both equity and fixed income volatility will come down. When the volatility comes down, liquidity goes up. When the liquidity goes up, the bid offer spreads continues to narrow. At that point of time, P multiples can continue to remain elevated.
Okay, yes, and that's the reason perhaps gold was slipping that day, because you sell what you can, and India is perhaps in that list. But given the fact things are settling right now and it's expected that FIIs are going to come back to India soon, what are the big investable themes that you see in India at the moment?
Yes, so the India bull market, the whole point is that there are few structural changes which India is trying to do. Now, let me put it this way that I do not know whether those structural changes will finally happen or not. But the market does not wait for that particular event, whether it happens or not. Market tries to go into that particular direction. So that direction is that India will increase its share of manufacturing GDP in the coming years from 15% to, put a number, 20, 25, 30. I don't care. I'm looking at the direction. The direction of the flows are telling me that this is what India wants to do. Secondly, India is able to transact it with its neighbors in non-dollar. Third, India is a non-aligned country, and for a long period of time, we used to berate that India is a non-aligned country. But there are so many countries in the world which do not want to get sandwiched between two opposing world powers, which are in Cold War today, US and China. So if I look at everything around me, it tells me that global flows, I'm not talking about in the market alone, I'm talking about real economy, will continue to favor India over coming years. What can change? Whether we like it or not, in a democracy, we should not be talking about a leader, but this is the world which we live in today. So the key
Okay.
man risk is important, but there were three themes which I talked about 6 months back. One was the electrification theme. The second was defense tech. The third theme I talked about was tourism.
Okay, point taken. But Ritesh, then I understand what you're saying about India and the leadership, etc. But what should be the right portfolio approach then at the moment?
The right portfolio approach in our back would have been do not run any leverage because we are in the new high vol environment. You will keep on getting lots of bouts of weakness in the market. But after what I've heard from Bank of Japan governor, I would say that you continue to be remaining invested in the market. Okay. And I would say that if the view continues to be good for a reasonable period of time, then there is absolutely no reason at this point of time to increase your cash levels.
Okay, Ritesh, thanks so much for making time and speaking with us today. So